pensei em mim, eu pensei em ti, eu chorei por nós. Que contradição, só a guerra faz nosso amor em paz. Eu vim parar na beira do caos, onde a estrada chegou ao fim, onde o fim da tarde é demais, onde o mar arrebenta em mim, e o lamento de tantos anos.
Não é sobre ter todas as pessoas do mundo pra si, é sobre saber que em algum lugar alguém zela por ti. É sobre cantar e poder escutar mais do que a própria voz. É sobre dançar na chuva de vida que cai sobre nós. É saber se sentir infinito num universo tão vasto e bonito. É saber sonhar, então fazer valer a pena cada verso daquele poema sobre acreditar. Não é sobre chegar no topo do mundo e saber que venceu. É sobre escalar e sentir que o caminho te fortaleceu. É sobre ser abrigo e também ter morado em outros corações, e assim ter amigos contigo em todas as situações. A gente não pode ter tudo. Qual seria a graça do mundo se fosse assim? Por isso eu prefiro sorrisos e os presentes que a vida trouxe pra perto de mim. Não é sobre tudo que o ser era capaz de comprar, e sim sobre cada momento, sorriso a se compartilhar. Também não é sobre correr contra o tempo pra ter sempre mais, porque quando menos se espera a vida já ficou pra trás. Segura teu filho no colo, sorri, abraça seus pais enquanto estão aqui. Que a vida é trem-bala, parceiro, e a gente é só passageiro, prestes a partir.
right, guys, what is going on? Welcome to Tuesday. Welcome to the stream. All right, we should be good to go. We should be good to go, man. What's Gucci? What's Gucci? Hope everyone is doing well, man. It's getting hot here, dude. Fuck. But that's all right, baby. That's all right. What's good? Marshall, Monkey, Willow, Naruto, Nico, Jimbob, Jordan D, Zachjo, Big James, Ibranith, Torty, Amin, Felix, Eminem, Shay, Pavlos, Ram, Remy, Mitch, JP, Mia was good. What is good, everyone? We got an interesting day today, man. Highs and lows are just not aligning. It's not a bad thing, but it just not always the easiest environment. Not always the easiest environment. So let's talk about dollar real quick. You notice anything about the dollar and AUD USD? You guys see anything that's kind of interesting about that? Australian dollar is higher. It was way higher than it was as of now, but we see AUD USD trading higher, as well as the dollar index trading higher too. So that is interesting because, well, I kind of told you that yesterday, didn't I? Didn't we talk about the dollar potentially trading back into this range? Yeah. Did we talk about 63.90 or even like 64 even as an upside object? Yeah, we talked about that too. Yeah, Jordan, both are going higher. Man, how does he do it? How does he do it, chat? Crystal ball just never runs out of batteries, huh? I don't know. I mean, honestly, I usually don't expect that to be that far out of correlation. Wild times. Euro is lower, British pound is up. So, but that just goes to show the weight, you know, euro being a lot lower, dollar being higher. Even though the other currencies are higher as well. It's just obviously the euro and in the dollar index has the most weight. You know what I mean? Has the most weight. What about the Corvette, Mia? I might take her out today. It's top down kind of weather. Feels like a throwback, John doing Forex analysis. Well, to be fair, I would say into market, but because dollar index trading higher today, to me, has put some slight, I don't like the word pressure, to be honest with you, but dollar going higher, you know, to me, it's like pushing indices lower, if that makes sense. So there's a little bit of intermarket for you. There's like a big flag here as well. I'm just now seeing that. I've actually been on the phone and shit trying to figure out some bullshit with the credit report. Credit report shenanigans. That's why I'm actually a little bit late to today's stream as well. But yeah, huge flag here, and it looks like we're trading to the downside. So this doesn't look all that bullish as of this moment. Yeah. So I'd be mindful of that. Speaking of downside, one of you posted in the Discord earlier that you missed out. Oh, we'll come back to that in a minute. That you walked, I think you said you were in front of the charts, you couldn't find a setup, and then you walked away. And when you walked away, that's when the setup occurred. That's how it happens, man. That's how it happens. We have a high here, second one here, and then a third one here. So there is a very, very easy 1, 2, 3 formation. And that also happens to take out yesterday's PM session high, as well as yesterday's AM session high, which was the high of the day. So that higher one is actually up here somewhere, right around 994. So we get a 1, 2, 3 formation into that. We trade lower, many shifts in delivery here, because we have an imbalance here that got traded through, and then we have these up candles that got traded through as well. 9:15 closes and this candle opens. That's when we have 2 imbalances as well as this inversion. Wow. You missed that short. It happens a lot. Look, bro. It's not about catching every move. Okay? It's not Pokemon. You know, we're not here to catch them all. We're here to catch some good ones. You know what I mean? And not looking to trade all of them. So, anyway, you guys already know the rules, chat. If we have 2 imbalances, what do we do with that information? What do you do when you have 2? You trade the first one, stop at the second one. That would have served you well this morning. I just don't really know what the downside target would have been, to be fair. I don't know. I guess maybe just a 1 to 2 or a 1 to 3 at best, to be fair. Yeah. I don't know what the target would have been. Maybe a gap or something below that low, possibly. So I probably wouldn't have taken something like that. Uh-oh. We have a higher low on NQ here. Lower low here for ES. And very clean highs at 467. No, 469. 5,469. So we'll see if that's an upside objective for later. But I don't know, man. Again, I think today's a little hard to tell. High resistance highs here. Not quite the Judas model, but same entry technique as Dow with the 2 imbalances. High resistance highs here as well. So yeah, that's hard to say. I probably wouldn't trade today. I probably wouldn't do anything here. Yeah, coming up on 10K. Yeah, I'm getting there. We're getting there, chat. We're getting more subs, but we're actually losing members, believe it or not. I think we lost like 5 or 6 the last like 2 weeks or so, despite printing free money for you in the Discord by giving you targets in advance. It's crazy, right? That's crazy. But that just goes to show, man, like if you're lazy, this ain't gonna work, bro. I make it easy for you. But listen, I ain't gonna beg you to stay. You know what I'm saying? I ain't gonna do all that. So anyway, if we leave those lows like that, that may mean something. But we'd have to probably leave this low just like that. But yeah, I have that's pure speculation, like 100% speculation. I would not be confident in longing this right now. Shit, it might even come down for the morning session low, to be honest. It may want to attack that first. So, right, Armani. That's right. So anyway, what, for those of you that voted no yesterday, what was the reason? So the poll that we did yesterday was, did the coin flip exercise give you more confidence to place trades? And like 90% of you said yes. And there was probably like 5 or 6 at most that said no. So what are we missing here? What do you think you're missing? What do you think would give you confidence to actually like be comfortable with placing trades? Oh, and that low now is followed up with NQ. And then that low I just talked about a second ago that just got taken as well. That low right there, the morning session low, that just got taken too. See why I didn't long that, chat? See why I didn't long something like that? Even though we did get a divergence, yeah, but you know, it's just it didn't look right. Didn't look right. It's called experience, baby. It's called experience. But anyway, what do you think it is that you need? What do we need to discuss? What are some roadblocks that we need to overcome to give you the confidence to press buttons? Berries, what's going on? Welcome back. And then welcome back Mason as well. Are you gonna bring back the triple screen layout or nah? I mean, I have it. I don't like streaming it because I have my camera over here and that covers a lot of it too. And it's I'd just rather not do it. I'd just rather not do it. That doesn't mean you can't though. But I like pressing buttons. I don't mind flipping through time frames. I mean, what else am I going to do? What else am I going to do, chat? I don't mind flipping. Flipping coins. Flipping through time frames. It's all good. But yeah, ES, like we have low resistance highs here, but Dow doesn't have that, but it does have low resistance highs up here. So it's like, damn. It just like something just doesn't seem right. Something seems off about trying to go long here. You know what I'm saying? It just doesn't seem right. And then NQ has just many sets of low resistance highs. I mean, high resistance highs, excuse me. So unless you're going to scalp for inner range, I guess. I mean, we could watch that, but I would not trade it in the slightest. Meaning this right here. We'll watch it. We'll watch it. Okay. I'm telling you, I'm not going to trade it. But I mean, fuck, we got to do something. We got to at least watch something, chat. You know what I mean? If you're a teacher and you don't teach with live price, like, what are we really doing, you know? 1, 2, 3 potential on SPY. I liked SPY earlier. I don't like it anymore. I don't like it anymore because I did post that earlier in the Discord. In here somewhere. I was saying the previous day high or highs rather. I said those look juicy. I mean, they did. It looked juicy, and well, that ain't the case anymore. That's not the case anymore. So triple Q is coming down for these lows here. Looks like that just got absorbed. And then the Dow is usually just ass anyway. Came down for a bunch of lows as well. So yeah, again, honestly, I just don't know. But we'll see. We'll see if this is a liquidity sweep. We'll see if we can get a shift and then a return into that for higher pricing. Again, I'm not going to trade it. I'm not telling you to trade it. Let's just watch it. Okay? I would just watch it. Jordan said, I remember the lesson you gave us. When the market has big moves, we follow up with small ranges afterwards. Right. No, that's correct. That is correct. Lee Bright's going to trade it. What are you going to trade? The inversion here? That's got to be maybe like a what? 40-point stop, 30-point stop. Some good candle closures, though, I can tell you that. I definitely like the way the 5-minute closed there. But I don't know, something just doesn't, it just seems off to me. And I just can't figure out what it is. But something feels off about it. ES has the same one here. Dow has one here. So yeah, I'll just keep it here for a minute. We'll see. New 30-minute candle and a new 15 and a 5-minute in the next like 2 minutes or so. So 30 seconds will close this minute. We'll have one more minute, and then we'll see where things are at. We'll see where things are at. Was good, Flacco. So anyway, back to my question. Talk to me, chat. What do you think? What is it do you need? Do you think that you need in order to have confidence to press buttons, buy or sell, whatever the case? What do you think you need? Do you need experience? Do you need more trading models? Do you need more rules? I mean, what is it, chat? What do you think it is? Felix said patience. Well, that's a hard one. You can't really teach patience. You can teach ideas, you know, but patience itself is hard. It is. Let me see. So Manuel said, for me, it's staying consistent with risk management and being patient for the setup to present itself. I'm very impulsive and emotional at the stage I'm at. Well, I'm glad you told me that. It's not an easy thing to say. We just got our 15-minute close. So we'll watch this for a minute. It's just our 30-minute candle open is here, which means our 15-minute open is there as well. Ugh. I don't know if I'm a fan of that. I mean, well, at least you know, right? At least you know, and you understand. Like, yeah, it's the patience, right? You see how we've had patience the last 10 minutes? I've been telling you, let's wait. Let's see if we can get a closure above that. Well, it looks like we just got that. So the question now is, do we trade back into it and then rally from it? We just traded into that. We just traded into it right there. We have a 50 level here as well. A little bit above that, actually. 950 is like right here. 950 is about right there. It's a little bit above that inversion. So we'll see what this does. Manuel, what is your model here? No, I'm not saying here is on NQ, like what we're watching. I'm just saying, like, in general, what setup are you looking for? Is it a mitigation? Is it the imbalance? Is it the Judas model? Like, what is it for you that you like to trade? What is the setup that you're waiting for the market to present to you? And why do you think you're impulsive? Are you, let's say, trying to rush success? Are you trying to rush passing a challenge, right? Like Top Step, shout out to Top Step, not paid sponsorship, but I'm funded with Top Step. A lot of you are funded with them too. So, you know, speaking of Top Step, they actually sent out an email and they gave out a free reset between, I don't know, yesterday or the day before up until the 25th. So I think everybody got a free reset up until the 25th. So it's not time to YOLO, but, you know, just be mindful. Don't YOLO, okay? But yeah, what are we looking for, meanwhile? Eminem said strict rules. So what kind of rules? What kind of rules? I mean, hell, there's 48 laws at a minimum, right? Which I gave you in the 48 laws of trading video. Low risk, high reward setups. What was it? The law of the return. What was once bearish becomes bullish. That's what we're looking at here potentially. You know, or vice versa, right? What was once bullish can become bearish. Actually, that mitigation extends all throughout this whole thing here. That's bonkers to me. The law of the return. But anyway, we went over this a little bit yesterday. Some of you said max risk per trade. Some of you said max daily loss limit. Some people said max number of trades per day. Are these the kind of rules we're referring to? And yeah, I agree, Jordan. I've given you everything at this point. I can still give you more, of course. I mean, there's always like new shit, right? I mean, I could always give you new shit, but do you really need it though? You know what I mean? Hell, I've given you the lazy traders model too. Long the 25%. Aim for equal highs or aim for equal lows. Matter of fact, we should go look at that on silver. We're going to go do that in just a minute. We're going to do that in just a minute. But it gave you all that. They gave you the 25 and the 50. You know what I mean? Mason says experience. Yeah, that just comes with time. I literally cannot. That's the one thing I can't give you is experience. That just comes with time, you know? And since we live either way, we have no choice. We have no choice but to get older every day. You know what I mean? So if we're going to get older and experience things, we might as well pay attention. You know what I mean? And try to make the most of it. Pop said I need to journal more, record my trades, track them, etc. That's my focus for now. So one thing about well, okay, let's pause. There's a difference between a let's say a trading binder, like when you print out charts, and a trading journal where you write about it. Those are two different things, right? Binder, I like binders with the page protectors. I like those, to be honest. And I like printing off the charts with markups. Granted, I used to have a lot more markups. I'm very minimalistic now. I'm very minimalistic because I know what I'm looking for. And I can look at the chart and be like, yeah, that's there, even though it's not marked up, right? Like I can just look at it. But anyway, back then it was very, very detailed. Now it's just minimalistic. But a journal is kind of like, that's what you write out. I'm expecting I don't know. Let's just say we were journaling this. I'd say, all right, we have an inversion. I long the inversion, stop at the low. It's a 40-point stop. I took drawdown, how do you feel about it? Whatever. I would write stuff like that. Because there could be other times where obviously we need to let this pan out to see like what actually takes place. But right how you feel. Are you worried about it? Oh, price is dancing around my entry, and I feel like that meme that John posted, or the GIF that John posted yesterday, the pump it thing. I'm trying to like pump up the damn market. You know what I mean? Or do you feel like I don't care if I lose because the risk is managed? Who cares? I'm only in one micro. We're at a discount. I'm following my rules, and I think it's a decent trade. If I lose, I lose. If I win, I win. Who gives a fuck? Because your journal can change with time too. Recognize, oh man, I always get so nervous when price goes against me, but if I would just hold trades, they eventually go to my TP. I get out early. I move my stop too quick. Okay. Well, if you recognize that, then you know what you're doing wrong. That's actually one of the mistakes. That's one of the trading mistakes that Mark Douglas talks about. Moving your stop too early. Yeah. If it was me, I'd probably move my stop at break even at this point. We traded to the low end of the inversion. We even went through it, but our bodies are respecting it here. We just made a new high. We kind of left an imbalance here, but I can tell you right now, if I was in this, I'd be a little bit irritated. I'd be a little bit irritated. 1 to 2 is probably like right here. But seeing that much drawdown, dude. As soon as we got that new high, yeah, I'd probably take my stop down here and probably go like 3 or 4 points, maybe 5 to account for slippage as well. And I would say, okay, I'm break even, and now I don't give a fuck. But I can tell you, trading like that, like trading that close, because you've seen me do that in trades before. You've seen me do that in the trade recordings. You're like, holy shit, he's like 2 ticks in profit and he moved his stop. Like, what the fuck? Well, yeah, there are certain times when I do that. I don't always do that. There are certain times. This would probably be one of them. Because why would I do that? Well, this is our first imbalance. Actually, this is our first imbalance here, but this is our first imbalance like on the way higher. So this to me should be a breakaway. And we might be at a 1-to-1. No. A 1-to-1 would be here, roughly. A 1-to-1 would be there. Whatever that fucking level is. 1 to 2 is here. So 984 would be the 1-to-1. That's a partial. Boom. Boom. That would be a partial. But John, I only have one contract. Okay, well, fuck. I get that's definitely a break even then for me. At a 1-to-1, yeah. I wouldn't let a winner turn into a loser. Fuck no, baby. That ain't happening. But again, that's a very simple 1-to-1. That's all that's based on. That's not based on any concept. That's not based on that's not even based on time. That's just a simple 1-to-1 partial. And again, 1-to-2 is like up here somewhere. So that's how I would do that. And then now we just wait. My Forex funds gives you free resets every month. Jesus. Oh, I didn't see that second part, Pop. I get emotional with multiple losses in a day, so I plan to implement the idea where I reduce my risk after each loss rate. So if you know that you're going to reduce your risk, it's like taking that second trade is easier because you know you're not going to lose as much as you did on the first one. Manuel said, I see now I realize I have no actual plan. I kind of just get lost in price action live and trade every break of structure. Oh yeah, see, no. That's why I've told you for years that break of structure is the most overrated concept there is by far. It's just break of structure is just, it's not it, bro. It's not it. You know what it is though? A shift in price delivery. Way better. By the time you wait for a structure shift, I'm already in. You know what I'm saying? I'm already partialing by the time people are trying to get in trades. Once I started to see that, I was like, oh yeah, break of structure is fucking dumb. Now I do have a video on it. Never get break of structure wrong again. But hell, that's years old. And I only made that to cater to you fuckers. I do not care about break of structure. I think it's stupid, honestly. Shifts in price delivery will run circles around break of structure. Every time. So you can write that one down. And I agree, Cameron. But don't confuse 10,000 hours with concentrated 10,000. That's the caveat that a lot of people miss. The 10,000 hour rule is absolutely absurd. It's a made up statistic. That whole idea, okay, about 10,000 hours, they investigated like people who played the violin or whatever. And they studied different levels of violinists. And it was an average that, you know, the best had 10,000 hours. But it's not 10,000 hours by itself. It's 10,000 hours specifically focused, concentration, you know, intention. It's intense focus, not just, all right, I'm going to be in front of the charts for 10,000 hours. That's not going to do shit for you. So just remember that. When a lot of people talk about the 10,000 hour rule, they forget that part. You know what I mean? That's not it. It's the concentration and the focus of those 10,000 hours. It's too early for break evenly, right? You're probably right. You're probably right. But I said from the get-go, I'm not taking that live. And I said if I was, that 1-to-1 would be a partial and I would be E there. Or well, if it wasn't that, it would at least be a couple of ticks above my, at least 3 or 4 points above the entry, which is the lower end of this imbalance. Because if we give that back, I wouldn't want to be in a trade anymore. And if I've already partialed, a break even to me is just, it would just be a scalp basically. What do I think about the traders who take 1-to-1s but with the high win rate? Listen, I'll put it to you this way. I'm not going to argue with somebody who makes money. If you take 1-to-1s and you're making money, what can I say? What can I say? Stop making money? If you like 1-to-1s, if that's what does it for you, by all means, keep doing what you're doing. I don't think it's the best. I think you can improve on that. I show that every week. 1-to-2s, 1-to-3s. And then occasionally, you know, the runners are going to be higher. 1-to-5, 1-to-6, sometimes 1-to-10. Every once in a while, though. That's not, I'm not always aiming for 1-to-10. And even if I do, it ain't going to be the full position. But, you know, if someone's out there teaching people how to trade and they're doing 1-to-1s and that's all they do, if you're winning in the long run, I ain't gonna argue with it. Would I do it? Probably not. I wouldn't do it. All out at a 1-to-1, and if I'm in near the low of the day and we might rally the whole second half of the day, why would I get out at a 1-to-1? You leave all the money on the table. That's just the logic that I think of. So that's why I don't do that. But again, at a very fundamental level, I'm not going to argue with somebody who is making money trading. It's pointless. I mean, Ricky, I'm not saying that you using break of structure, you're going to lose money. I'm not saying that. I'm just saying, to me, based on how I see people use it, it ain't it. You know what I mean? It's just not it, bro. Like if you're waiting for something like this, oh, I'm going to get in on a retracement. Okay, well, while you're getting in, I'm already parceled out. So you're entering late. I've already made money. There's just, I mean, you know, it's not about trying to be better than everybody else, but it's just saying if you have a method that's better, why would you, you know, put your money in a C class way of trading when you can trade an A class? You know what I'm saying? Why am I going to take, why would I sit here and take 1-to-1s when I could take 1-to-2s, 1-to-3s and higher? You know what I mean? Why would I enter late when I can enter early? And entering early sounds bad. Entering early would be entering on the left side of the curve instead of the right side of the curve, or the RSV, whatever we call it these days. You know what I mean? But one of the earliest entries is going to be near the low, not later. You know what I mean? But like I said, if it works for you, if it ain't broke, don't fix it. If it ain't broke, don't fix it. It's just I look at something and I go, well, if this is better, why would I go backwards? Thank you, G, for commenting. Lack of trust regarding that previous quote. But what are we talking about, though, G? Trust in what? Trust in the setup, trust in the market, trust in yourself, meaning like a lack of trust, as in you don't think you would act in an objective manner for yourself, like cutting losses early, taking partials when you should, holding on to winning trades and stuff like that. Because maybe if you get into a trade, you're not starstruck, but you're immobilized, where you're like, oh fuck, I don't know what I should I move my stop? Should I hold it? Should I cut it? what should I do? And you're just lost. That sort of lack of trust. What are we talking about? Well, yeah, Ricky, but a mitigation, which a lot of people call a breaker, whatever. That is right, a low, high, lower, low, and then a higher high. But it's the context of all of it. It's not just the break of structure, it's the actual recognition of price running an old low or an old high if you want to be short, right? Because that is part of it, not just the break of structure by itself. But and then on top of that, there's a lot more that goes into it too, like framework, for example. Like, what are we targeting? You know, that's why I said earlier, what are we going to target? Internal range. And what I meant was these highs here, right? Short-term highs in this run lower. Because anybody that has been short, you know, the recent high is here. That already got traded through. So the next two highs are right here. And there's an imbalance right there too. And that 1 to 2 kind of fits right in there with that imbalance. That's why I was saying, you know, the 1 to 2 is up there. But this hypothetical trade that obviously that I'm not in, but this looks like that would break me even right there. After taking partials though at the 1 to 1. So I would not want to be in this. And let's just go double check the others as well. Just because, you know, I pointed out that there was this one on ES. That one got traded through, back into it, drawdown just like NQ. And we rallied at least like 14 points from that low. So, I mean, it was something offered. But these look pretty weak, in my opinion. They look pretty weak. But there you have it. A lot of MLM people love breaker structure. Yeah, I know. I know. There's a reason that they don't get the entries like I do, though. I know that sounds so arrogant to say, but it's true. Look at their entries and look at mine. So, but again, I ain't gonna argue with you, man. If you wanna take trades, however you want to enter, go for it. But if you want to snipe the 1 minute, you come over here. How about that? Oh, ES has lows, does it? Would you say 43.13 down here? To be fair, I don't look at that like equal lows. I don't. I know that sounds crazy. But John, those are equal. They are. They are. But they're so far apart. I like them when they're like this, very close together. That's what I like. I don't like shit like this, personally. But now that that's there, and you've pointed that out, that makes a lot of sense. That makes a lot of sense why we got a reaction and immediately abandoned that. But just look at the level of precision here, though. Even going long in a bearish market, by following the rules, you still would have got paid. At a partial 1 to 1 and then going break even, you wouldn't have taken a loss on this idea. You know what I mean? That is superior trade management by far. But again, what do I know? Oh, break of structure, let's long. Straight drawdown. I don't like that. I don't like that at all. I took drawdown on silver, but I kind of expected that I would, because I was late. That's what happens when you're late. When you fuck around, you find out. You know what I mean? Can't be mad at that, chat. You know, if I got pulled over for speeding and I'm actually speeding, I mean, what am I going to be mad? Well, officer, you're an asshole. No, I'm the asshole for speeding. You know what I mean? Like, come on. Can I share those old trading binders, like old examples, just to see what, where the things you look for, etc.? Gee, I mean, yeah, I can post some in the Discord later. Look, I'll tell you exactly what I've done. Okay. I think that's a slightly lower though there. That was definitely lower. Look at that dookie shit. NQ is still a little bit higher, but anyway, this is what I would do. Okay. Matter of fact, I'll show you right here because I still got it, baby. I still got it, baby. Look at that shit. Okay. Here's a kind of an older one. Well, it's from last year. I got one on the back as well. I do front and back. So I'll have a chart, right? I'll label it with what it is: silver futures, Aussie futures, or like the pair if you're trading FX, ES, whatever it is. I'll also mark the time frame, the day, and then the date. So like this one, it's hard to see because the camera's not going to pick all this shit up, but you can see it generally. Okay. It says silver futures 5-minute time frame, Wednesday 9/18/2024. And then obviously the markup, I've got equal lows down here. I've got the 1, 2, 3 formation up here, and I've got a gap right here, which is not quite the Judas model, but it is close. And I took a pen and wrote gap short. And then at the bottom down here, there's text. So I ain't going to tell you what I wrote, but basically TP was supposed to be this. Apparently I had a platform glitch and I got out before I was supposed to. I guess I got out before the equal lows due to a platform error was the outcome. It's still a winning trade in this example, but you know, that's what I wrote in the bottom. So does that do it for you? Does that do it for you? I'll take a chart, not the gray, but a white background, because you're going to print too much ink. White background, whatever color candlesticks you want. The name, the time frame, the day of the week, and the date. Okay. And then at the bottom, or even on your chart, you can write your own notes. Okay. Oh, I went short because of the Judas model, stop at the high, risking 1% or $20 or $200 or whatever it is. I'm going all in because Top Step gave me a fucking reset. You know what I mean? Like, you could write whatever you want, obviously, but that's what I would do. So it's kind of a mix of both, where you've got your chart, but you need to write some commentary. So when you look at it later, you remember like what you did. Like, oh, why did I do that? Oh, I was aiming for equal lows. That's liquidity. Oh, I was entering after an inversion. There was two imbalances, so I traded the lower one with the stop at the second one. Boom, 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 boom. See how easy that is, bro? You see how easy that is, chat? Yet I can't get you to do it. Yet I can't get you to do it. But that's one of my binders right there. Okay, so you're welcome. You're welcome. No thank yous, no fucking nothing. You're all ungrateful. Ungrateful, chat. Ungrateful. I'm out here giving you my time, my knowledge for free. Nothing. Anyway, you guys still here? Chat's kind of dead, man. Are y'all still here? Drop some ones in the chat, man. Or am I solo? Was good. 49er Shane, what's going on? Oh, okay, you guys are here. Thank you. Thought I was talking to myself for a minute, bro. Thank you, Manuel. Appreciate it. Look at that. See how hard that was? Anyway, let's go to silver to close this out. Oh, it's already 1 o'clock. Okay. I gotta stop bullshitting. All right. Where's silver at, baby? Didn't I give you those equal highs yesterday? Didn't I tell you 2340 yesterday? Didn't I tell you 2340? Who's your fucking dad? Who's your daddy, Chad? Who's your daddy? Who's your daddy, baby? 1022. Possible market maker buy model on silver. That was up here. That was actually right at the high, by the way. We drop lower. That's where the lines come in. That, on a 5-minute, you will not see that. On a 15-minute, that's a gap. That's a discount gap. Why is that a discount, John? Because I fucking said it is. That's why. No, of course not. From the equal highs down to the low. Okay. What's going on? Silver futures, 5-minute time frame. Retracement. Or excuse me, rally, retracement, higher. What's here? What's here? 50%. Oh, okay. Well, what does that mean? It means we crossed 50%. It means we're in a premium. It means that once we have crossed 50%, that is a highly good indication that we're going to run the highs. Are we going to long on the way higher? Why would we do that? Why would we? I did. To be fair, I longed like right here. I longed right here before that. Right? But what was the model I gave you? What was the lazy traders model that I gave you? Long at 50%. I told you if you're going to do that, expect drawdown. I told you that. I said expect it. Expect drawdown, baby. I can't even put it on the 50%. What the fuck is that? All right. Stop at 25. Aiming for the equal highs as a perfect 1 to 2. Didn't I say that? Didn't I give you that? Come on, man. Come on, baby. Trading is so hard, John. It's so hard. It's hard because you don't follow the fucking rules, man. That's why. You don't follow the rules. If you followed the rules, it wouldn't be so difficult. But no, you want to be lazy or impatient like me. I understand. I get it. I get it. But you got to realize, bro, look how long that took to pan out. We had to wait until damn near London. We had to wait till fucking London for that to pan out. Ain't that a bitch? Right. But if you're in at 50% or even better at this gap down here, that's why it's a discount gap. If I didn't cover that already, sorry. That's why it's a discount. It's below 50% and it's near 25. Okay. It ain't at 25, but it's near it. Oops. There we go. Discount gap. 1 to 2 based on 50. Now, entering at that gap, my stop probably wouldn't have went at 25. Even though it was. Why would I say that? This is where the people that just left, like the 8 or 10 people that just left, this is where they miss out. Okay. 1 to 5. IRR is a scam. Okay. Sure it is. Keep making your dumbass Instagram bullshit. Keep making your stupid ass shit. Go ahead. Why would my stop go here? My stop was here. My stop was at this low. That one right there. Why would my stop loss be there? Come on, chat. Why would it be right there? And I'll zoom out just to make sure you get it. 31.845. Actually, it was 855, but I won't, you know, I won't be too picky about it. So believe it or not, I almost got stopped out on that. Thank you, Naruto. Yes, Felix. Thank you. Felix was first. Yes. If we are trading, okay, superior stop loss placement. My entry was dookie dog shit. I'll give you that. It's not always about the entry. Okay, even though I make it seem like it is as an educator, because I like being a sniper, because I'm an actual sniper. Okay, maybe not every trade, but I've wicked every time frame you can imagine. So, you know, been there, done that. Okay. If we have original consolidation, right? Manipulation during, actually Reddit equities open too. So during New York, basically. New York manipulation. We have a lower low that goes below a low, right? We talked about that yesterday. So that's what? Turtle soup. Right after that is what? NCE. Right after that is what? Oh. After manipulation is either NCE or low risk buy. Low risk buy. Okay. Low risk buy. So then what is this right here? What does that make that? Oh, that makes, well, if we've already had our low risk buy, then the next thing would be what? First accumulation. If I'm trading within the first accumulation, whether that's up here, that's what I did. I traded early. Okay. There's a short-term low right there. So there's discount liquidity. Okay. Either in here or below the low, or even shortly after, like say a down candle in here. Either way, all of that is within the first stage of accumulation. Where do I put my stop, John? You know this already. I made a video about this like a year ago. If you're trading based on the market maker model, whether it be the short or the buy, okay? If you're trading a stage, your stop will be wide if you do this, but if you place your stop at the low of the previous stage in a buy model, that's here. Does the first stage reach the low risk buy? No, it doesn't do it. The low risk buy is subjective because it could be right here or it could be here. Okay. I know it's subjective. It's not always perfect, but pick whatever you want. You want to have a stop way down here? That's a little bit too wide. Okay. Like your mom, but this, sorry, I had to say it. This low risk buy, okay, that's the low of it. If this is our first stage, anywhere trading in here, that can be the stop loss that I know it might be a little wide. It might be a little wide, all right? But does it get stopped out? No. It looks like it will. It looks like it will, but look at that breathing room. Look at that breathing room. Look at that. It never gets to my stop, turns around. Remember yesterday we got that alert? Remember that? I was like, oh, that's a good partial. Yeah. Why do you think I was telling you that? Well, if I gave you the buy model up here, we took out a short-term low and hit a gap. How far can price go below? A low. A gap or an imbalance. You've known this. Had you entered at the low, below the low, at the gap, at the down candle, whatever, anywhere in here, a new high is a partial. And then guess what? Wherever your entry was at, it does come back to the first stage here. But if your entry is anywhere in here, as long as it's not at the high end, it never got stopped out. It does go against you. It does run this low. But then guess what? Right before London, it eventually runs for the highs. And TP eventually hits. Okay? And that is why, my friends, I took a duplicate trade on the demo side. Okay? Because demo trades you can hold for as long as you want. Combine trading or funded trading, you can't hold past, I think, 310. So, but that's what that looks like. Even, okay, look at this. Hear me out, all right? I know we keep losing a few people, all right? That's probably why they still struggle, because you're not here paying the fuck attention, okay? But watch this. My entry was not great. Look at it. Look at that. That blue arrow is right here. I think I logged this imbalance right there, right? Not bad. Immediately against me. But guess what? The low's right there. It doesn't go to the low risk buy. How can I feel safe doing that? Well, safe is not a word you want to use in trading, but I guess confident would be the right word. How could I feel confident? Because look at it. We ran whatever low that is. I think previous day or whatever. Some shit like that. We already got a short-term low, which is an engineered low, right? Engineered low, rally, boom. We take both the engineered low and whatever low that is. We rallied off of it, down candle here, respected as the low risk buy. So if, I guess, price has already done its business down here, it's not going to come back to the low. At least it can come back some and ain't going to go back to the low, right? And then guess what? Final TP at what I gave you yesterday, 32.40. Boom. Look at that. Look at that. When I told you over the many times over the last couple months this year, I told you what? Your entry doesn't have to be sniper. It doesn't have to be. Obviously, it's easier and better if it is, but it doesn't have to be. And what I'm showing you here, I am showcasing to you, all right? I am showcasing to you that your entry can be ass. It's subjective, okay? It's a value judgment. This to me was an ass entry, but it was absolutely superior management. Did I get out at a new high and just say, fuck the equal highs? No. I held on because I know there's liquidity up there resting. And yes, it eventually was tagged, right? Even taking drawdown, if your trade management and your patience is on point, then you can grow that account. That's what I'm trying to tell you. Don't be afraid of drawdown. It doesn't mean you're wrong. Hell, this was in a premium anyway. If you're going to long in a premium, it might come back to discount on you. It might do that, right? It's coming back into a discount to do what? To take out short-term stops. That gap is in here somewhere as well. Okay. I accidentally longed the fucking micros instead of regular silver futures. It is what it is. It's the same thing though. Still this very, very, very close to the same price action. Okay. Even with drawdown, it doesn't hit the stop and it goes into profit. It does consolidate, never goes, let's say, to our break even, right? Never does that, and eventually runs for TP. Sometimes trades will look like this. Would it have been better if I got this gap down here? Obviously. But that's not what happened. I did happen to enter a little bit early. But that video that I gave you, I trust that. That's why I made it. what kind of mentor would I be? Okay, here's a good question for you in closing. What type of mentor would I be if I taught you certain rules, right? And then could not showcase trading that way? I'd be an asshole. Wouldn't I? Well, John, you never have your stop at the previous stage low. There it is. That's it right there. You know what I mean? So yes, it's possible. This is why I don't like longing in a premium prior to any liquidity runs or any sort of retracement. Because I did incorporate this imbalance here too, even though it was traded through. I had incorporated it at the time when I was watching it. So that's what that looks like, okay? And there are your levels there. If you're longing anywhere in the first stage, price never went to your stop. There was some breathing room here. Partial, final TP. And then today, I guess it came back for trailing stops if you held on too long. You know what? This is actually a really, really good point too. I'm going to make one more point and then we can hop off. Okay. There was something that I really liked. Appreciate that, Torty. Yeah, you guys are ungrateful, but I appreciate it. Drop a like on. Can I do that? Can I not like it? Drop a like on Torty's donation. We appreciate that, or I appreciate that. I'm going to end it with this. All right. There was a chapter in The Disciplined Trader. I don't know which one it is because there's like 16 chapters or something like that. 17, I think. And there was a point where Mark Douglas said, you have to let the market tell you what is enough, not your monetary value, right? And I thought about that for a second. Before I wanted to move forward, I said, okay, if we're looking at a chart, how can I find out what enough is? What is enough, chat? What's enough? For me, to answer that, this is how I answered the question internally, all right? I said, what is enough for me? For John Phibb, what would be enough in a price run? And the answer to mine was either 1 point above equal highs or an imbalance above them, which we really don't have on this chart because we just don't have one, at least on this time frame. Either 1 tick above the highs, or sorry, 1 point above the highs, my bad. 1 point above the highs, a gap or an imbalance above highs, or the next 0, 20, 50, or 80 level above the highs. So for me, right, think about what I gave you yesterday. What did I give you? 32.40, right? Why would I do that? Because that's the next 0 level from 38 to 40, not 50. 32.40. And what's our high? What's the exit? Right there. On the candle that makes the high of the day. Buy low, relative, sell high. That's the name of the game. Monetary, whatever the monetary value is, I have to accept it. Let's just say hypothetically, it's $499. Oh, John, but I want 500. I mean, you could add a tick or two if you'd like. Sure, you could always do that. But if you miss, then you're going to ruin that trade. You know what I mean? So based on the market, that would be enough. Even if it happens to run higher, that's okay. Right? So that's how I answered that. Does that make sense, everybody? Drop some 2s in the chat if that makes sense. Letting the market tell you what is enough, not your funded company, not your combine, right? You have rules. Yes, you have to make $3,000 to pass a 50K. Those are your rules, right? And you do have to make that much. You can't do it in more than, I think, 2 trades. Because there's a 50% consistency rule. So you got to have at least 3 trades, I believe. So you can't make more than $14.95, right? Basically $1,500. You can't make more than that in a day. So you have to go, okay, like the trade that got me funded, for example, that 5-minute Nasdaq trade, the 5-minute imbalance, I didn't even really have to hit the highs in order to pass. It was actually more than what I needed. But I was letting the market do what it needed to do, you know? And it's true, Mason. The market doesn't care what you want. It doesn't even know about you. The market doesn't know you. Doesn't know me either. And by understanding that the markets are coded to do these things, that should give you all the confidence in the world. What do you think gives me the confidence to tell you market direction before we go there? You know what I mean? Why do you think we were looking at stuff like this? Why do you think I told you I'd partial out a 1-to-1 and go break even? Look at what we're doing. We're lower. And yes, like Ricky said, it might trade down here. You know what I mean? But that's why I'm confident. It's the experience. It's knowing that the markets repeat themselves in certain manners and entering around certain times based on certain frameworks. And knowing, like Ram said, by doing the 100 trades, by flipping that coin, you understand, okay, we've got equal highs or equal lows. We've got a model. We've got an entry technique. We've got this, that, and the third. And it looks good, but I'm still not going to over leverage because this might be a loser. But I'm still going to take the trade because even if it does lose, I know the next one will make more than the loss. You know what I mean? Whether it be today, whether it be tomorrow, whether it be next week. You know what I'm saying? And so having those things in the back of your mind, your risk is under control. You know it might not pan out. But if this one doesn't, the next one will. Even if that one doesn't, the one after that might. You know what I mean? And by having all these things in alignment, you should be able to just dominate these trading combines or trading your own account. You know what I'm saying? So with that being said, we'll end it. All right. Be good. Be blessed. We will be here same time tomorrow on Wednesday the 16th. Before you go, let me show you this real quick. I told you guys that I had just picked up the annotated edition of Meditations. That's here by Robin Waterfield. I know I asked you this yesterday. I didn't answer it though. I asked you guys, does that name sound familiar? And I don't think anybody said anything. He's the one who did the complete works of Epictetus. Edited and translated by Robin Waterfield. That's the same guy. That's why that name should have sounded familiar to you. And it probably didn't because you don't read. But that's okay. Don't listen to me. Don't listen to me. But yeah, this one's really nice. So yeah, do that, Mason. Do that and let me know what you get after that 100 trades. Let me know what you learn. All right. See y'all tomorrow.
Sweet like honey, yummy like lunch. Seeking adventure, talks double dutch. A good bad bunny, likes her stuff. Always a lot, but never too much. Skin bones ready, lips glazed cherry. Nails at a length cause it keeps her merry. Sweet like honey, scrummy like lunch. Always a lot but never too